morning to all our viewers who've tuned in. You're watching Morning Trade on Moneycontrol with me, Stacy Pereira, and I'm here to help you navigate through this trading day with some actionable trading strategies, sectoral trends, and more importantly, your queries that we hope to answer through the course of this show. So keep you commenting on our live stream, and we'll try and have them addressed by our guest on the show. But before we bring them on board, let's see what we're getting from the global handover. Well, stocks on Wall Street closed mixed, and the S&P 500 and the Nasdaq closed lower as the U.S. market remains on track to break its 9-week gaining streak. The 10-year Treasury yield is approaching inched higher after that strong private payrolls data. And stocks in the Asia-Pacific region trade mixed as well, while the GIFT Nifty is suggesting a flattish start for the Indian market, but with a positive bias. And Brent crude corrects about 1% to little under $78 a barrel on that large inventory buildup that was seen in the United States, while concerns of low demand still linger. And among stocks in focus today will be Grasim, which has announced a 4,000 crore rupees rights issue opening on the 17th of January. Dabur, in its quarter 3 updates, has guided for a mid to high single-digit revenue growth, while Sobha reports its best ever quarter in Bengaluru, as well as delivering a 37% year-over-year growth in sales value. Well, we have quite an interesting day to go ahead with, especially after what we saw the markets do yesterday. It was a bounce back that we saw from at least the benchmarks after 2 days of selling through the start of this year, which got us a little cautious. But what can we say? The Nifty had its make or break moment, and now it has shown us that it is moving upwards. But can this really be sustained? And are we likely to see any more bigger corrections before that perfect upswing up until the elections, and so many other factors that could have a bearing on how Indian markets really perform? So let me get my guest on board. I have Kranthi, Bathini, the equity strategist at WealthMills Security, who's joining me to give us a fundamental picture at this point. Now, we've seen 2023 gave us close to 20% returns, and pretty much those who enter the market have gained. But do you think we can replicate this momentum, especially when we know that January is known to be a month that hasn't seen that kind of uptick? Will we be able to keep that momentum going?
Stacy, good morning. Markets are exuberant at this point of time. What we are witnessing is it's a completely liquidity-led rally in the markets right now. The sentiment is quite positive, and the valuations also seems to be not that much stretched at this point of time. So Indian markets in the emerging market space looks very interesting given the kind of growth prospects are concerned. So the setup is quite strong, and the question is, we may replicate to 23 in 24 also. Yes, we need to wait and watch, because the markets have built up a strong setup. We have climbed the wall of worries. There are so many concerns in 2023. We have witnessed the bond yields rising to 5%. We have witnessed a couple of war-like situations across the globe, rising crude oil prices. Despite of all these worries, in a rising interest rate scenario, markets in Indian markets sustained, and they're at currently at way above 21,650, and it touched lifetime highs. So it's a liquidity-led rally at this point of time, Stacy. How the global events that are going to pan out, how the interest rate cycle is going to turn, and also the big event in India is the general election. So how all these things are going to line up is extremely crucial. At this point of time, it's all liquidity-led rally, and every dip, the buying interest is emerging in Indian markets. Going ahead, we are about to enter the earnings season. So the results are also extremely crucial.
these Q2 results to really bring that or be that trigger to take markets forward from here on. But let's also look at the technical side of it, and joining me to do that is Raja Venkatraman, the co-founder of NeoTraders. Good morning, and we probably want to ask you first off the charts that we're looking at. Now, we did see that reversal in trend happen yesterday, and we were really hoping that we did not go down on that 21,500 level and below in terms of that support level. We managed to hold on to 21,600 levels for the Nifty at least. Where do we move from here? What would be the levels that you're tracking? And then perhaps we'll talk in a bit about the Bank Nifty too, because that one has seen, at least in yesterday's trade, we saw it was those banking names right from HDFC and even ICICI Bank who was really pushing the market, or really giving the headline numbers that push. So what can we expect in terms of the charts? What are they suggesting at this point, Raja?
Yeah. Good morning, Stacy. So, like you rightly said, there has been some volatility, and like you rightly said, the historical trends are in place right now. So, December was a very trended month, and we had a fair share of upside, and even beyond expectations. But January is not going to be easy. But nevertheless, the overall bias continues to remain on the bullish side. So one should refrain from, thinking about exiting their positions and, looking to short the market, because that is a broader outlook which one should have as they are trading or doing some short-term investing in January. Now, talking about the levels, Nifty is having a very strong, max pain point around the 21,650 mark. So now the earlier support was around 21,000 to 21,100. Now it has bounced up to 21,500 to 21,600. So these are the important levels which one should be tracking. And on the upside, I don't think that it's going to be easy to create a new high at 22,000 so easily, because at the higher levels there are some call writing happening. So it's going to be a challenge to move higher. But then the market is going to move in a wider range for the next few days. So that's what one should consider. The one of the main triggers in this is the first trigger which I would like to highlight here is Bank Nifty. Unlike Nifty, which saw a spirited up move, Bank Nifty has not seen that over the last almost 14 to 18 trading sessions. So, which clearly says that there is some pent up energy in the banking space that is about to unfold. And if the rate cuts were to happen, and if also the kind of positive results which are going to emerge is going to influence the environment, I definitely see the Bank Nifty taking the lead now and helping the overall bullish momentum to sustain. So now when you talk about Bank Nifty, unless we lose 47,000 on the downside, okay, it's still way down. And unless we lose 47,000 on the downside, I don't think that we should worry so much. We should look for some upside, and the upside is going to emerge from the banking space. So banking, reality, auto, NBFC, these are some sectors which one can look for in the current month.
We have those names out there for you, which will be interesting to look out for. But one trend that I'm going to spot out today, and we'll talk in detail about it since we're also getting in some Q3 updates, that one coming in from Dabur that we're looking at, and it was pretty good, the updates that they've put out. They expect their consolidated revenues to register mid to high single digit growth in Q3 of FY24. The company has also witnessed sequential improvement in the demand trends, although the rural growth was still lagging compared to the urban growth, and that has been consistent now over the time that we've been seeing. But there are early signs of revival in consumption, they say, which are visible, and those improving trends in volumes. That is what we've been tracking for at least FMCG companies quite closely. The consolidated revenues expected to see a difference, especially in their food and beverage segment. That is expected to grow in high single digits as compared to the home and personal care. That one too is seeing some record levels of growth. So it will be interesting, and I'm bringing out Dabur now because these results have come in. But today is also going to be a very interesting day for Nestle, because the stock split will come into force from today. So let me go back to Raja and get his views on how we can see these kind of stocks, be it Dabur or Nestle or from the FMCG back, and what really supports them at this point. I think we're also getting a query from someone who's asking on Nestle, especially today, whether one should wait for market open or they need to wait for a few more days and then look at this stock. So Raja, what would be your recommendation?
Yeah, so like FMCG space has not really contributed much. There have been some names like Nestle, Britannia, Nestle driven by the buyback news, and Britannia has seen some uptick. But now, in the last 10 trading sessions, we are actually seeing the FMCG participate, so which was not prevalent. So everyone thought the festivities, everything will bring back some cheer in the consumption space, but that did not happen. But now what we are seeing is front-ended effect, and the impact could be seen in the current quarter. So the last quarter of 2023-24 is going to be a good one for the FMCG because the overall trends. So what we'll see now is a shift in the participation. So some of the sectors which did not participate so much, and people who were not able to find good value additions or good value bias in these sectors are now finding it. And like you said, Dabur has also given a very nice move. It was lying in the shadows and now it's coming out. Nestle, if you are looking to participate in Nestle, then one should wait for the dust to settle down because the trend has been quite strong. So there could be some bit of profit booking as well, and people will wait to find out how we should be looking at the overall trend. So I would not advise buying immediately on at the market open. Wait for maybe the next 2-3 trading sessions to see what's happening and then look to participate. So maybe the next time when we connect, I'll be able to give a better opinion. Right now, but now is not the right time to participate.
Right, so one should wait for this stock split to actually get enforced and then get into to look at Nestle, at least if you're looking to buy it at a later stage. So I hope that answers that query. But let me get back to the fundamental picture and get Kranthi back in with us to understand what we were talking about in the FMCG space, because yes, we're talking about financials and how that is going to be something that is going to drive the market, but on the other end we also speak of how consumption and whether that picture is really going to take off for us in this year. So what would be your perspective when it comes to FMCG stocks or that whole pack, even in terms of their earnings, because those are the stocks which are actually have a really expensive valuation and which is why they're perhaps avoided, one would say. So how would you look at the FMCG space at this point?
Stacy, all the stocks in the FMCG space have been in a long consolidation phase, and there was a concerns with respect to the rural consumption also. Right now, what we can see is going ahead in an election year, typical election year, the rural incomes tend to go up, and right now what we are witnessing is both the government capex and the private capex also going up. So both these going to drive the rural incomes going ahead. But in this in between, the monsoon also plays a key role with respect to the rural consumption is concerned. Definitely 24 is going to be a better year for the FMCG companies, as you rightly mentioned, stocks like Britannia and the Dabur, HULs, and the Nestle with the split with the stock. I don't think so. The split is may not going to change the fundamentals of the company, but it's definitely going to create some kind of buying interest over a period of time, because the investors who have been away from the stock, it's going to create much retail interest to buy the stocks at a splitted price at this point of time. So one can invest in the names like Nestle at a very staggered manner. There is no need to jump and buy these stocks at this point of time, but one can build these stocks over a period of time in their portfolio. 24 is going to be a better year for the FMCG companies after the long consolidation, and we can see some kind of uptick in terms of their earnings also going ahead, improvement in the margins also.
Right. Okay, let's talk about another sector that has been in focus, that being realty. And we're bringing that up because yesterday, if you look at just yesterday's trade, the volumes among realty stocks was at some 200% higher. So we're trading at those volumes, one would say, be it DLF or even Sobha. Sobha has come out, in fact, with its Q3 update, and that also looks quite promising. They're saying total sales of 1,951 crores is what they're saying. Average price realization is also somewhere at 11,732 per square feet. So they are looking at good positives. As that is just a stock update or specific stock, but as a sector, Kranthi, how would you look at realty right now? And then maybe we can also go back to Raja, because there is a query on Sobha developers as well, and whether one should be looking at that. So Kranthi, first to you on the fundamentals of the realty space, because we are seeing we are in that turnaround time now after that really long term of underperformance from realty. So what would you have to say about that?
Absolutely, Stacy. You rightly mentioned. In the 2023, the best outperforming sector in India is surprisingly reality. And all the reality stocks have outperformed in the market, and a majority of the stocks have given a good amount of returns. So, starting from the bigger names to the mid-cap companies are concerned. The point to ponder upon the reality stocks, Stacy, during FY23, we are in a interest rate upcycle. So during this cycle also, normally reality stocks are portrayed as interest rate sensitive. Whenever the interest rates cycle is in an uptrend, there will be always a negative impact on the reality stocks are concerned. Whereas contrarian to the general normal view, Indian reality stocks have outperformed. Both it can be high end and the mid end, and also the lower end of the pyramid also. By and large, the reality space have outperformed in FY23. So the kind of numbers what we are getting, and the new project outcomes and the pre-booking numbers are pretty much strong at this point of time. So this strength can be continued in the first coming quarters also going ahead, and reality is going to be outperform next coming quarters also. The main reason is if you have to do a relative comparison with the Indian reality prices with the other emerging market space and other nations, in a reality companies valuations looks attractive still at this point of time. So this makes a compelling investment proposition for the global investors vis-a-vis the domestic investors also. So we can see the outperformance in the reality space is going to continue in specific names. Now it all depends upon stock specific, which stock the investors want to chip in, and what is the geography the company is going to operate. These are the things going to play a greater role going ahead.
So fundamentally, realty looks like it's going to still have further uptick. But let's answer Shokan P's query, and he's asking whether it's looking at the current scenario would be the right time to accumulate Sobha, since it has been moving quite high in the past few days, and whether it will go further upwards from here. So Raja, maybe you want to answer that query on Sobha developers specifically.
Yeah, Sobha has been moving phenomenally well, and if you see in the last year, it has more than doubled. But if a person is holding right now Sobha developers, it would be a good time to book some profits and look to buy at lower levels. Yes, while we all agree that the trend in reality can continue, but a 75% jump in the last year definitely says that things could get overheated, and then you may have a cool off emerging here. Yes, yesterday we did have a nice day in reality, but then one needs to understand that the bubble is about to burst in reality, and we will expect a correction here, and the correction would be a good place to buy. This would not be a right point to add to your existing position. Use for some dips, and if you are expecting a dip in Sobha developer, there are two levels which I would like to suggest. The first level is around 1200, and the second level is around 1160. So these are two levels which I'll track for buying back into Sobha. But right now, profit booking is advisable.
Right. So profit booking is what you're advising on Sobha developers. Let's get in another query. We're getting Anubhav Saxena who's asking us what levels he can exit City Union Bank. He has about 200 shares that he had got at 158 rupees. So if you have to give him a target level to be exiting for City Union Bank.
So, City Union Bank looks to be headed for some upside. So, you can target a level of around 168 to 170 as the immediate target. Yes, it still seems far away, but then that much room is very much possible. And on the lower side, below 147, one should not be holding on to the position.
Right. So that's an interesting strategy there coming in for that you could use for City Union Bank as well. Let's also address a couple of other stocks that will be a buzz in trade today. One of them being Coforge, which has gone on to appoint Saurabh Goyal as the chief financial officer. The board members have agreed to this, and this will take effect from today itself, January 5th. Remember, Ajay Kalra has relinquished his position as the CFO of the company due to personal reasons, and he will though continue as a full-time employee and senior advisor in the company up until the 10th of July 2024. Another stock that we are going to be tracking closely will be Grasim. That's because today, in fact, yesterday, last evening, this update came in that the Aditya Birla Group company has received the approval from its board of directors for the rights issue, and this is worth a good 3,999.89 crore rupees. So close to 4,000 rupees of a rights issue is what they're putting there, and they've set the issue price at 1,812 per share. The rights issue will also open on January 17th up until January 29th. And remember, the record date for this issue has been fixed on 10th of January. So that is the date you need to be looking out for, at least when it comes to Grasim. Remember, this fundraise will help them go on to meet their capital expenditure plan and also repay their existing borrowings, is what it says. The right entitlement has been fixed as the ratio of 6 shares for every 179 fully paid up equity shares of the company, which will be given to the eligible equity shareholders on that record date of January 10th. So these will be some stocks that will be a buzz. Let me try and quickly squeeze in a couple more queries so that we have those answered. We're getting another one here that is asking on, the whole logistics sector. But wait, before I get to that question, let me bring in Kranthi once more to get in a little broader perspective on defense stocks. Now, that is something that we've been seeing quite active of late as well. That is today, in fact, a UBS report on HAL as well. They're overweight on that counter. So besides stock specific, as a whole, we're getting into an election year. We're hearing of news saying that, there is going to be an increase in that the kind of output, the expenditure at least they have for defense. So how will you look at defense as a sector in this current juncture?
Stacy, defense, we have been quite bullish with respect to defense as a sector. Defense is one of the key sunrise industry right now. Actually, a couple of years back, there was no defense stocks in India. Right now, we have defense focused stocks at this point of time. Aviation also, which is one of the blend of defense right now. So the valuations are not cheap at this point of time with respect to the defense stocks are concerned. But given the kind of earning visibility with respect to defense stocks and their export orders, and also the domestic demand that's rising up at this point of time, defense looks very interesting at this point of time. Any dip in defense stocks, definitely a very good entry opportunity for the investors for a medium to long-term perspective. It should be more stock specific at this point of time. The stocks valuations are not cheap that much, but any dip in these stocks, definitely it's going to be a warranted buy for the investors on a medium to long-term perspective.
Right. In fact, if I have to go by that UBS report, they have increased the target to about 3,600 per share for HAL. They say it has a defense compounding mechanism which will really take that stock higher. In fact, also the policy to actually be compressing about 60 billion opportunities what they're looking at, and which is why they have initiated that coverage on HAL. But let me bring in Raja one last time quickly to tell us what he's recommending for our viewers. What would be his stock picks in today's market scenario?
Yeah, considering the defense space, I am having one recommendation from that sector. The first recommendation which I would like to share is a buy in BEL at around 188 with a stop loss at around 183 and for a target towards 195 and 199. You could give a buy in second buy is from Sun TV. A buy in Sun TV at 733 with a stop at 723 for a target towards 745 and 755.
So interesting picks that you've put out there for our viewers, Sun TV and BEL, Raja's picks for today. But I guess that's all the time we have on this edition of the show. Let me thank both our guests, Kranthi Bathini, the equity strategist at WealthMills, as well as Raja Venkatraman from NeoTraders. Gentlemen, thank you for giving us your time this morning, and hopefully we answered most of our viewers' queries, but don't be disheartened if we haven't. We'll definitely try and take them up on our next edition come Monday. But for now, we have to wrap up Morning Trade. But coming up next for you is Opening Bell.